Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast. It is episode 59. Today's date is January 16th, 2019. It's a morning episode, everybody, and it is Wednesday, my dudes. What is up, everybody? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Bessing. How you doing, Nathan?
Hey, dude.
Happy Wednesday, my dude.
Long time no podcast. It's been a bit.
I know. This is our first podcast together this year. I've uploaded a few this year. We're all over the place. But yeah, let me go ahead and get you some numbers.
Where are we at in the market?
Oh, well, yeah, the bitch is open. She opened 40 minutes ago.
Yeah, it's 10 o'clock.
She's in full swing. We are in full swing right now with the Dow up 151 points, the S&P up 12 points, the Nasdaq up 50 points, gold up $3.90, and oil up 14 cents. Oil is creeping up. I think last podcast we did together, she was at like the 47 range. She's at 52.25. We're green all across the board. I'm going to head over to cryptos. I'm going to get you that number in just a second. But it's been a volatile ride, this market. Crypto, Bitcoin up just a little bit, only up $27, so slight move upward in Bitcoin. You want to talk volatile ride? Bitcoin hanging out in 3,600. We hit all the way to 4,000 like butter, and then sold right back to 3,600. Since we've been here. Like, I think there's going to be volatility until some sort of interest or until some sort of demand gains. And while we're on the topic, I think that there's going to be something like that in the future, in the upcoming years. Lest us not forget that the ICE exchange is starting their version of a Bitcoin and futures trading platform and network. And so that will drive crypto prices as Wall Street will start to put its imprint within the finite amount of Bitcoin. So I think that those demands will come eventually. It's going to happen, but it's going to be a slow process, and it's going to creep up on you. And then that's when we're going to go back into bigger and better prices. So it could be a couple years as innovation pursues.
I saw a little news headline that said gold's been up 10% since October.
Yeah.
That's exciting.
She took that a little dip for a while and then just kind of went sideways and trickled down and
some support levels.
Yeah, trickled down that 1,200 range and then held fairly strong around that 1,200 range, and then creeps up. Gold is a creeper. It's a creepy little commodity because it's not volatile. It's a safer investment. So the only time it's going to be volatile is if there's mass panic and it's going to go up. Volatility in gold would be a good thing, but I don't know. I've seen that price with one of the funds that you and I both watch, JNUG, the triple leverage junior gold miner. She's had a very wild ride, and she has spiked up. She's down today at 8.97, but she went all the way down to almost $6 ish, and then has had a nice spike up over the past couple of weeks. But as the market has gone up, JNUG has inversely acted and trickled down 11% in the past week, almost 12. Interesting.
Yeah, I caught some of that. I got kind of hit on that. Not too bad, but
while we're on the let's go ahead and let's head on over to the market news. With Nathan Oliphant.
It's been a bit. Things are going on. Government shut down.
Yeah, no one's talking about that. Nobody in the stock market is really talking about that, but it is having a impact, right? Like what's up with the TSA? I keep hearing about the TSA. I heard people aren't showing up to work.
I don't know. I don't know about that.
Dude, I straight up heard that TSA is like because they're not getting paid right now. Their paychecks are suspended till further notice, and a lot of employees are not showing up to work. And some man brought a gun into an airport in Atlanta, got it through security, no problem. So that's an issue.
Test that.
But at the same time, can we not give credit to the fact that the Earth is still spinning, taxes are still being collected, we're still going to work, you still got food at the table, your job is not in danger.
Yeah.
So what
some people's are. It doesn't affect like more than just us, you know. Like I've heard a bunch of like Coast Guard people and getting paid and shit. I mean, that's people's families, man. That's paycheck.
Yeah. Do you think that'll have an impact on the economy?
I don't think it'll have a. Yeah, I think it'll have a little impact.
You think they'll get back paid?
I don't know, man. What's that called? Furloughing people?
Yeah, like we're gonna get you. We'll get you later, but no one's buying the bonds, man. That's the problem. Nobody is willing to buy bonds anymore, as Fed is raising rates and no longer buying, no longer printing money and buying shit. So there's really few less ways out of that, and some of that is agreements here and there, and budget cuts here and there, and spending jackups here and there, and building a wall somehow.
Other news. Here's an interesting article. Jeff Bezos is getting a divorce.
Mm-hmm.
The owner, the CEO, I think, right? It's a big. He's like the richest guy in the world. Jeff Bezos. Amazon.
According to his holdings, but liquid net worth.
He owns Amazon.
Yeah.
They're getting a divorce, and there's a huge like question of like what's going to happen with the shares, and because like you were telling me that she was like an investor back in like 1998.
Well, they got married in 93 and they launched Amazon in 94. So she was there from the beginning, dude. Like she was there when, okay, honey, you go work on your project. I'm sure it's going to work out. I promise. I'm here for you. She was there for those days. Actually, I'll see if I can find it. I'll send it to you sometime. But one of my favorite pictures is Jeff Bezos sitting at a desk. It's literally an office with a desk and like almost nothing else in it, and a bunch of cardboard boxes, and in a big piece of cardboard on his wall, he had Amazon Inc. spray painted in black on his on the wall, and it looked like he was sleeping at his desk. And it said, "This is one of the first Jeff Bezos pictures of at Amazon Inc." It's like, damn. It's a very inspiring picture.
So
but
that,
I don't think she's going to get any of the company. I think it's all pre set upon. We're probably not going to know the full details. I'm sure he's going to retain ownership and voting rights of the company. She's just going to get fat paycheck.
He's going to have to sell some shares, dude.
Mm-hmm. Speaking of selling, I sent you an article and I wanted to talk about it. There was this one on CNBC. Anonymous Buffett-like bet on the S&P 500 causes a stir on the options market. An anonymous trader sold 19,000 put options on the S&P index on Monday. The bet recalled Warren Buffett's famous wager on global stocks more than a decade ago when he sold billions of dollars in index options. While Monday's sale was nowhere near as large as Buffett's, the trader could still lose more than $500 million if stocks turn sour over the next couple of years. So I don't know the exact details of the dates, but they do have some numbers. Just 19,000 put options that expire on December 18th, 2020. So long, right? It's 2 years, basically. As long as the index doesn't drop more than 22% from its current level of 2582 by that date, the bet will earn the trader roughly $175 million in premiums. So it was a $500 million bet and instantly returned $175 million.
Yeah, it's a credit on your account.
Fat credit, son. But they go on to talk about how Buffett did something of the similar and collected $4 billion in premiums on his options of holding companies. That's fucking ridiculous. Still has some contracts from that will not expire until 2026. Dude, he sells premium options out till 2026.
That's insane.
He has the capability to do that beyond the options market that you and I are in.
You just have that much like equity and capital, just push
Yeah.
stuff around.
It's disgusting, right?
It's almost like an art. It's almost like fucking carving marble.
Ridiculous.
That's kind of like
man.
what it is. The stock market as a whole is like a big chunk of marble, and to carve it out like that, it's just fucking art.
And you just take a piece, you just keep chopping at the marble, and then the more pieces you get, the more that you can make with yours. You know.
Mold and shape, baby. Mold and shape.
But yeah, that is interesting. Maybe this is someone just calling the fucking bottom right here.
Or a bottom.
How do you get 19,000 fills, bro? That's ridiculous. Goes to show you what kind of money is out there and what kind of money there is to be made in this economy.
How do you feel 19,000? That's a fucking hella bet. If you're on the buy side of that, that means 19,000 people are buying like puts around that level for 2020. There's that much like distrust in the market. I'm gonna sound like a fool if like recession hits tomorrow.
I mean, if someone's willing to put in the right price, I mean, anyone will sell. How many shares is that? If it's 19,000 contracts, 19,000 times 100 is 1.9 million shares on the S&P 500. They're going to get assigned 1.9 million shares. Wow, and they don't know. It keeps saying his or her account, his or her trade. Like, yeah, I'm sure it's his.
So what do you think? How is the gluten-free Jason Bessing going to react to this?
To that, nothing. That's just news. That I'm sure that shit happens daily off the books. There's so many trades that happen behind our backs and that we don't know about that are not illegal. They're just not disclosed to the public.
Yeah, this is probably some guy like works for CNBC that was just browsing the volumes of some puts.
Yeah, and they found
like, holy shit, 19,000. Somebody made a fucking sold all these. What the fuck,
bro? That's exactly what I was thinking when I first read this.
CNBC loves a good flower story.
They do.
Like,
he was searching for anything.
I'll watch futures overnight, and it'll be like 100-point drop on the Dow, and it'll say Dow tumbles triple digits.
Yeah, right. What the
stocks slide?
Stocks slide. Volatile session as market moves 200 points.
What is it? My favorite. What's the action word? Is it
surge?
Adjective? No. My favorite word that they have used is comet. I think it was Macy's. Macy's stock comets.
Comet. Craters.
Yeah, how bad does it have to crater down?
Craters. I like a stock surge on opening. We're up like 80 points.
Yeah.
Stock surge as Goldman has good earnings. That was like the headline today.
CNBC likes to shake the market.
Yeah. Oh yeah. Oh man. It's disgusting, isn't it? And people. Yeah. I think it just gives shit to react to.
I think their headlines are more dramatic than the actual market is, and I like the analysts. Like, I like Squawk on the Street. I like watching that in the mornings.
Yeah, I like to watch it.
It's good. It's good input. I mean, I take it with a grain of salt and like do my own research, but it's good. It's a good place to start, like on stocks that they're talking about.
Absolutely.
Why do some people like? And then they have why do some people not like it? If Kramer's on there, he's definitely gonna tell you why he doesn't like it.
Mm-hmm. One thing I do like is sometimes you're watching and they'll cover a stock that you own or that you have interest in, and you're like, oh shit, they're talking about Ford right now. Like Ford unveils a new unity with Volkswagen as they
recalls 1 million cars.
Yeah, and you're like, oh okay, and you're not going to get that kind of news watching local news or reading the paper or even browsing through Facebook. Like it's a very specific news for a very specific thing, and because of that. Because they have a very tight grip on that very niche market, whatever they say is taken as the truth, Hedge funds come in there all the time and they're like, head investment analyst of Household Capital Inc., blah, blah, blah. Like, oh, okay. What the fuck do they know about the world? Like, yeah, we put in a bottom near the 2% on the S&P. We're going to continue to increase our position. That means that they're selling. Like, that's the perfect time to increase your liquidity, is when you say, oh, yeah, we think Google's going to go down. I don't know, man. It's just, it's gross. Another bit of news, we talked about this yesterday. So Bitcoin ETFs keep popping up left and right and get shutting down left and right. And there is a new one that is going to be proposed that is considered to be less volatile. That will
Why is
hold.
it less volatile, Jason?
It is not only going to hold just Bitcoin, but it will also hold U.S. Treasuries. And
I don't like it.
You've got to laugh because Bitcoin is
There's no way that's going to get approved.
Either way, Bitcoin was designed to be the thing that takes down the treasuries and the. I don't know. What if Bitcoin skyrockets and you hold that? You're going to get dividends on your Bitcoin. And if it goes down, you're getting dividends, I guess. I think it's interesting. I keep a small bit of Bitcoin in my portfolio, but I keep a small bit and I hedge it against the stocks that I own, So it's kind of the same concept.
Yeah, I guess so. I don't think because the SEC doesn't even like Bitcoin ETFs.
Not at all.
I don't think that they want their volatile asset, if you may, or digital asset, tied to a secure. I guess the idea is there, but I don't think like they would want those two things tied together. You're making something that's like really less risky and almost the safest asset on the market, and you're making it less risky. I feel like.
I'm sure because I'm sure they don't want like mutual funds buying it. They don't want to have some sort of allure to it because of the high risk nature. Because if there's a huge allure and they're like, yeah, this thing's good to go, and they can start firing up Bitcoin ETFs, I'm sure a lot of people would have lost a lot of money, dude. But you never know. The theory is that all those ETFs will bring in that Wall Street money to push up the price. That's the theory. So I don't think this will be the one. It just sounds like it sounds like they're going to be like, okay, now you guys are just trying too hard. I think it'll get shut down.
Yeah, I don't know. Maybe we'll see. The Winklevosses are probably laughing. I just feel like the Winklevosses are just laughing at these people right now.
Wonder what's going on with them. Are they like? Are they buying? Are they buying up? Or are they like? Yeah, because they're getting railed right now, son.
I feel like they were smart enough to sell at the top.
Do they trade it or do they just accumulate it?
I don't know. I think they just bought a bunch, man.
I'd like to know.
Their net worth is huge because of cryptocurrency.
Yeah, that's all they do with their life now, and that's weird. I don't know. I just find that weird because they had such a. It's almost like they know what they're doing. They're seeing innovation where other people aren't, and he's done that before. Well, both of them have done that before, right?
What?
Spotted innovation before other people did, like with the Facebook thing.
Right.
So maybe they just have a way of seeing something. I mean, their Gemini exchange is regarded as a pretty big player in that space. And they own that.
Yeah. All right, well, let's move on, man.
A lot of Bitcoin talk.
Yeah. What do you got for my market terminology, baby?
Oh my God! Would you believe that I was unprepared?
You were what?
But you know what? I was listening to a podcast earlier, and they were talking a lot about the fear gauge. The VIX. So I was like, we don't really talk about that, do we?
You can do that as your market term. Do it.
So let's do it.
Lay it on me.
Do you like that? You like that idea? Like how I was able to push that out? So, the volatility index is an index that measures volatility. Oh, would you guess that? Wow.
Crazy. How does it do that?
It is a very complicated, complex algorithm that you can view online. You've sent me a picture of it before, of how the VIX is calculated. But basically, the gist of it is it takes and applies a mathematical formula to the ratio of puts and calls that are being traded on the S&P 500. It takes into account the implied volatility and the pricing on it, and the volume, to determine how volatile the market is projected to be in the near term. So it goes.
So what do they they have a? Did you say that they measure the calls and the puts?
Yeah, the calls and puts on the
1 month?
S&P 500. I believe
1
it.
month.
I believe it's the 1 month.
They're 1 month contracts.
Yeah, because it's the near term, short term is what it wants to track. Now, this is supposed to be just a gauge for people to understand what's going on. If there's a high amount of calls being bought versus a high amount of puts being bought, more calls means that the VIX, or the volatility index, also referred to as the fear gauge, will go down. So as the market goes up, that's less volatile. It's not a uncertain market. Things are going smoothly. There's not a lot of fear out there. Fear is low. But vice versa, if the market is going down or projected to go down because of a high amount of puts or high premiums in the put space of the SPY, then the volatility gauge will go up. Now, most commonly when it spikes up, it likes to hang out in like the 40 range. But during the .com crash and the 08 crash, it got up in the 80s. Meaning that there was just nothing but puts being bought, causing high amounts of fear. So,
Fear and greed index.
So how do you trade the VIX? Well, what if there's ETFs out there? But do we do it?
No, I don't. You don't trade fucking.
You don't trade volatility?
It's nothing. I don't know.
You don't trade volatility?
I don't know. No, I don't touch it.
Well, in theory, it sounds good, right? Like, what if you bought it as a hedge? Like, oh, if the market's going to... I'm trying to use an example here. Okay, so there are VIX index ETFs out there. So there's long and short. So say you wanted to say, oh, if the market goes down and there's a lot of fear out there, I want to be able to capitalize on that. You can buy an inverse VIX fund that will go up in times of market going down and vice versa. It will go down as the market goes up and volatility goes down. However, these ETFs do not act correctly because there is no underlying asset. The only underlying asset is an index that calculates a number. There's no way to physically emulate that number with a correct product. There's ways that you can mirror it. There's ways that you can get close to it. But at the end of the day, it's very expensive. It requires lots of complex instruments that have time decay against the time decay, and fees on top of the time decay. So they're not good instruments for actual trading. Yes, they will move as the VIX moves. Absolutely. But at the end of the day, there's just so much money being lost in arbitrage over this thing as time goes on. And it just keeps reverse splitting. Just continues to do so. I think I'm going to pull up, what was the one you said, VYX? There's one if you pull up. There's a VIX fund if you pull up and you go back. If you go back to 2009, it'll show that it was at 1.5 million a share. But that's because the fund has reverse split a million times, just time after time after time after time after time. If you pull up the one VXX is the short VIX, and you will see that it has lost 94% over the past 5 years, or over $600. So it's not a thing you just want to hold long term or just keep in your portfolio. And these products, they're just. I don't trust them, man. You trade options on that bitch. Sell calls on it. I won't touch it, man.
Yeah, I don't touch it, man. It's just.
I
Like,
don't touch it.
if you look at those graphs, man, over like long periods of times, they go down. Like if you just normal VIXs, they just go down.
If you pull up the actual VIX, actually, hold on. I'm sorry. I'm trying to pull up the VIX. I think it's $. What's the symbol for? I don't want the. There it is. Yeah, it's at 1855 right now, so it's low volatility, fairly low volatility at the current moment. But this is for the index itself. This is not any ETF. This is not anything else. So,
All right.
Interesting thing to watch, but not something. Just one of those little indicators to put on the side of your trading day. If you're a day trader, this might be fun to watch.
It's cool. I think because like if the VIX is going down, doesn't that mean there's more puts coming in?
If the VIX is going down,
More
there's
puts being bought?
more calls are being bought. There's less fear. VIX is going down.
Right. If it's going up, that means there's more puts being bought.
Lots of puts being bought.
Yeah.
Or higher interest in puts, higher volume in puts than calls. So. All right. Well.
Moving on to our topic of the day, everybody.
Are you excited?
I guess.
This one's it's already here. I feel like we just did this. What was it, back in October?
Every time.
November? We did it? Or October?
Yeah, October-ish, yeah. It was October-ish.
But because we were like, Thanksgiving will be here, then Christmas, then we're right into earnings season. We're a little late on this episode. We should have done it a few days ago, but
it's fine.
Whatever. It's new year, new us. We do what we want. So we have fiscal year 2018 quarter 4 earnings ramping up. And how do we know that we're ramping up? What are the first symbols of this? What are the first signs?
Banks.
There you go. The financials, the big banks. Yesterday we had JP Morgan and Wells Fargo both put out disappointing numbers. Well, I think Wells Fargo missed by like 4%, but JP Morgan missed by like 10%. But JP Morgan finished up on the day and Wells Fargo finished down. Like, got crushed. But today, we had some pretty nice Bank of America earnings and some pretty nice Goldman Sachs earnings.
Government Sachs.
Conspiracy. Goldman sucks. I'd buy that shirt. That's a good idea. Whoever had that idea is smart.
Yeah.
Goldman sucks. So, we're in full swing. So, it's 2019 as well. We also have the general consensus, or those CNBC talking heads we were discussing about, saying that we're expecting a little bit more volatile year, a slower year in the economy because of higher rates, more expensive debt. We're going to see less buyouts, less liquidity in the markets. So it's going to be a somewhat disappointing season in the economy. Do you buy into that whatsoever?
You think it's going to be disappointing?
I don't think it'll be disappointing by any means.
Oh, what are you trying to say? Huh, Puck?
This is what they're saying.
Oh, maybe. I think we should, let it flesh out a bit. I feel like taking financials as a primary indicator is kind of, I don't know, I wouldn't say foolish, but I think you should take more, see how more industries do.
Why are the banks so heavily watched, like from the get-go?
Because that's like a really sign of almost a big economic indicator. Because it's like, who's loaning money? Are people getting more money? Are they, are people getting more house loans? Is the mortgage department doing well? I mean, are people spending more, borrowing more money to do things? And if it's slowing down, people kind of take that as a red flag.
If I'm not mistaken, the last
I
few.
feel like, there's other companies that do well. They're gonna do fine. Besides financials, is what I'm trying to say.
So it's regarded as like a sign because more loans means more business is going on.
Maybe, yeah.
That kind of makes sense because when people take loans from banks, it's like either for a house, so hundreds of thousands of dollars. It's not like credit cards.
I feel like, this isn't always true, but I feel like you should go into debt with the idea that you have a plan to pay it off. And I feel like that's a very risky business decision that a lot of people shouldn't make unless they're for sure that there's going to be an income to pay it back. So I feel like more loans would mean more, stability in the economy. I guess I don't know.
Well, when you tell me that some banks are doing good, like today, Bank of America, Goldman Sachs, and some banks are doing bad, Wells Fargo, not necessarily doing bad, but not as great as expected, Wells Fargo and JP Morgan, it might just be the management. It might be the exposure to what they have. Bank of America, if I'm not mistaken, I think is bigger than JP Morgan and Wells Fargo.
Huh.
I think they might have a more international impact as well as Goldman Sachs. We know that they have an office in every government. So I think that's just a reflection of the company, not the economy. I don't think we can look at, JP Morgan, here we go. Here goes earnings for the rest of the year. There's a bigger picture to it. Maybe housing's slowing down. I don't know if JP Morgan does mortgages, but I know Wells Fargo does.
They do.
They definitely play in shit that has mortgages. Bonds.
Are you well, speaking of just not watching just one thing, are you watching anything else this coming earnings season to kind of give you a hint of how the market's which way it will turn? Because if industries or sectors do start showing red earnings or bad earnings, then that's not good.
You know who I like to watch? I like to watch discretionary stocks. Are people taking vacations? Are they going to Disney? Are they going on Carnival and Royal Cruise Lines? Are they flying? Are the casinos doing good? How are hotels doing? I think that's a great sign of the economy because people will take loans in a bad economy. People probably won't travel in a bad economy. If anything, I feel like more loans being taken from banks in the financial sector could be a sign of a bad economy.
You think people are taking more loans in a bad economy?
It leads to one, right? There's always a credit cycle. Then there's a bunch of defaults, recession comes out, lower rates, more people buy, and the cycle just continues to reset. So as those rates,
I guess in that scenario, yeah.
So I think if you look at some of the more discretionary things, alcohol. Well, actually, no, that's more of a staple. I'm sorry, but it's true. But more discretionary things, I think will be a much better indicator on where is the money truly going. Is it going? Are people confident out there? Are they going to restaurants? Are they going to Darden, DRI?
I want to watch tech. That's what I want to watch coming up. I want to just see because I know it's not gonna. I don't think it's gonna have a great quarter.
I don't know about.
Especially with you got fucking microchips and going on with makers with iPhones not doing well in China, and that kind of has a huge impact with people who make iPhones, people who provide stuff for iPhones. It kind of impacts other people. It's trickling down.
They have
Apple's got this trickle down thing inside the tech industry.
Yeah. I heard a statement that so we know Apple has had somewhat dismal earnings for the past couple quarters, a little slower growth in iPhone sales. They said they want to get away from reporting the iPhone sales as a metric altogether. which is definitely not a good sign as far as iPhone sales, but it also says that the company has bigger and better things in mind. They have other ways to innovate, which may not be transparent now, but if their sole focus right now isn't pumping out new iPhones because of increased competition, like right now China is high on their Huawei phones. Are you familiar with those? Huawei.
Oh, the Huawei?
Yeah, it's HU.
They got in a lot of trouble in the States.
In the States, yeah, the Secretary of Defense, or not the Secretary of Defense, Secretary of State banned them, saying that they have equipment capable of spying on American citizens.
Yeah.
Because Apple, Microsoft, whatever. Amazon doesn't have that with the Alexa or whatever, because whatever.
Right.
I'm not going to argue with this. They just don't want that access in the Chinese hands.
They don't want China spying. It's okay if we spy, but if China spies, it's not good.
Not good, dude. It's okay. We can spy on you, but we don't want other people spying on you. Big Brother. That's why they're called Big Brother. They're watching out for us.
Keep you safe.
They're watching out for us, man. Scary, right? Anyway, that's a different topic altogether, but there's increased competition, and let's be real. You and we're pretty loyal to iPhones, but those Samsung phones are not bad. They're not. A lot of people are very happy with them.
I just feel like I feel like phones have sort of like a half-life. Like, how you describe like chemicals or atoms or molecules with half-lives and stuff. I feel like brands of phones have different half-lives, and I've had Androids. I had the Galaxy S5. And I've had iPhones, and the iPhones last so much longer and perform so much better over longer periods of time than Samsung phones do, and then other non-iPhones do. I mean, that might not be true because I don't know. I've only owned the Samsung, but I just feel like Android devices in general. I don't know. I've
never owned an Android device. I've had an iPhone since I think the first I think it was the first one.
There's a stigma that goes around that says like Android phones don't really have like the best quality over time.
Yeah, they decay more faster.
Yeah, that's what he called it, the zeitgeist, the common belief.
Yeah, but is that not relevant to like upgrading technologies? Like how they're like, oh, they slow down those phones. It's like, yeah, because it's like, yeah, slow down your phone or drain the cunt out of your battery.
I think Apple's nailed it on the head with like what they provide. It's like a simple thing.
That's why I love it.
Complicate it. They don't overcomplicate it with like. I'm sorry, the customability of like Android phones is great, but I feel like you're putting too much shit inside the fucking phone.
You know what I like about Apple products? When you have this is from way back when maybe 2006, 2007 when I didn't have an iPhone. If you broke a phone or lost it or something was wrong with it, you were on your own. If your PC got a virus and you couldn't figure out how to uninstall something, you were fucked. But if something goes wrong with your shit, you have Apple support that's free to you that walks you through any of your problems with any of your devices. When I was going through and fixing the memory on my MacBook because I fucked up the hard drive, I'm not going to go into details. I fucked up the hard drive and I needed to basically reset it and then restore it. They walked me through it. It was a long 6-hour chat process, but they walked me through. They used screenshots and at one point even went into my computer and clicked on things for me. And it didn't cost me a dime. They fixed my stuff and they thanked me for being a customer. They asked if there was no problem to it. And that is why I love the loyalty to
Google
Apple.
Has Google support. They
That's true. That's true. But now they do. Apple was the first to really have that, comfort. Like, oh, you're with the Apple family. So I get that warm, cozy feeling when I have Apple products.
That's true. But Apple, I feel like, yeah, you're right. I guess so.
Very user-friendly. But then you get the people like, oh, well, I want to customize. I want to be able to pull my things out of my devices. I want to be able to move my memory around. I'm like, okay, well, I don't really need that in my life. So I don't need that complication. I need, how do I open this app? Yeah. I like Apple. I'm a huge fan of the company. I'm really curious to see what they do on these earnings because
their projections went down.
I think that they're going to be just fine, dude. I'm hoping they go through more pain because if their stock gets cheap enough, I'm gonna start buying it, dude. I'm gonna start loading up.
Like 112, 100.
Like when people are like, "Oh, here comes the death of Apple," because people are calling it. People are saying like this is the end, and I'm like, that's such bullshit. Oh, they can't innovate anymore. Look at their iPads. Well, they're doing other shit. They hired tons of Tesla employees. Clearly, they're working on some sort of vehicle stuff. They're lying and saying that it's for like Apple Play in the car and stuff. And like, yeah, no, they're doing microchips. Like, they're not stupid. And they have that huge like $21 billion cash position.
The little fucking ring that looks like a fucking UFO.
I've never seen it.
It's like this like loop. I think that's what it's called, the Apple Loop.
Apple Loop. Did they ever come up with that Apple Home Pod? It was going to be like it was going to be the Alexa thing, but with...
I think so. I don't know. I heard someone talking about it the other day, and I was like, I don't know. I feel like you're late to that game.
Yeah, they should have came out with that a while ago. But you know what? They sometimes... One reason I really like to watch tech is it's a good way to look at like what's happening with business. Just because a business isn't taking a loan doesn't mean it's not growing. But
See, that's exactly what I was trying to say earlier, is like it's just not financials that's just going to lead like how earnings are going to be.
Exactly. But a lot of those small tech companies in the tech sector, even the bigger ones, their big driver, their bread and butter is like business solutions and software systems, point of sale systems, record keeping, bookkeeping and accounting systems, softwares and shit. That's what like a lot of that tech is. It's more than just iPhones and Google. A lot of it is business solutions, telecom services, stuff like that. And if those put out decent numbers, that means that there's some growth still happening. So I like that you pointed out that it's good to watch tech.
Yeah. Tech can be volatile. But it's also kind of like it's not that volatile. It can be volatile at times.
Mm-hmm. At the end of the day, the XLK top holdings I'm pretty comfortable with. Microsoft,
I like the
Apple,
growth behind
Intel.
It over long term. If we're going to generally say that.
There's a lot of strong companies in there, but they are at the whim of the chip cycles, the semiconductor boom and busts. You know, they're along for that ride.
All right, well, let's give our final outlooks on the on earnings season. What do you think?
I think a lot of it's going to come in with expectations. I think we're going to be right at par. Right at par.
You know, I want it to be great and just like for companies just to say, yeah, we unexpectedly had a huge freaking turnaround.
Just all the companies just double earnings.
I think you're gonna be a little under par. I don't think they're gonna do that great. I think we're in a bear trend, man. I just feel like we're just gonna be in a bear trend for a little bit.
We're still very cautious.
Bit longer. You know what? I'm gonna put a timeline on it. Fuck me. You can call me on this. I'm gonna stay around like April. We're gonna be starting an uptrend and crawling out of this correction. At least by April.
I like that.
You like that?
I like that. So, sideways earnings season, and then a lot of factors that are good that will happen during it will lead to a bringing up and out. I like that. I could get on board with that. Are you ready to put your money? Will you put your money where your mouth is? TQQ call.
Today I'm thinking about it.
On April.
I'm thinking about it. I'm thinking about buying a call. Fuck. I'm thinking about buying a triple leverage NASDAQ call for April at the money.
I don't know if I'm quite about that, TBH. If I can be honest, TBH. So I'm not
back to your ex-girlfriends. Is that what you're saying?
If I can be honest, TBH. I am not. I was gonna say, what are we watching? But I'm not watching anything because we're gonna come right back later this afternoon.
I'll tell you what. Can I tell you what I'm watching then?
Yeah, go for it.
You've said this before, and it's LYG, and I forgot some news, and this is why I'm watching LYG. Brexit deals are like falling through, And so that means no Brexit. Back to normal for, I guess. I don't know.
For now.
Yeah.
I don't know exactly what they voted on, to be honest, because I know Brexit is happening, but I think it was like her way of leaving and her proposed methods were what were declined. So not the whole Brexit got canceled. But
I think more scrutiny behind that, and then we'll bring a little bit more stability to the economy over in Britain. And so I like Lloyd's Banking. They got a 10-cent dividend coming in on a 285 stock coming in on April. So ride that bitch out now.
They got a good dividend. Dude, 83% insider ownership. It's like a 4.5% dividend. I don't hate it.
Yeah.
LYG, love it.
Well, I think that's about it then, man.
All right, man. Well then, without further ado, I guess I'll see you in a few minutes.
For some live
Twitch.
spread.
Live credit spread. Love you guys.
Bye.
Romantic, isn't it? Shut up and sit down.